So today I'm going to give you my trading strategy. This is one strategy you have to trade to become profitable, and I'll just explain how to do this and go through it very quickly. Firstly, on the daily time frame, you find where price is delivering from and where price is delivering to. And this is the all-time high, external high, and this is the what's external low. So this is sell side, this is buy side. Now you look at the internal. We have this internal high, this internal fair value gap that we did not trade into yet. So we have this internal high buy sell liquidity, and we have an internal, this is the main internal low sell side liquidity, and this fair value gap. This is my drawn liquidity. So you must have a delivery and then a drawn liquidity. This is for bias. This is not where it's going to hit today, and your draw could be up here. It's a bit conflicting, so um, you can also not trade and wait for more price action, and I didn't even trade this week because it's FOMC week. It's the daily BISI for leg up. A BISI is buy side balance sell side inefficiency, meaning that there is a likelihood to retrace into it and go up, and SIBI is retrace and go down. But in the daily, I'm just looking if it's going to respect it or inverse it, and I'm just trading for it to reach to it, not how much it would, where would it go. Then you go on the 4 hour. So again, on the daily, where are you delivering from? Where are you delivering to? Right now, I think we're delivering from here into here, so I would be bearish. And then on the 4 hour, you look at order flow, and you go look a bit more recently, and you just look at how is price reacting to fair value gaps. Respecting these ones, inverse this one. You're also finding more liquidity. So you can see that here you have a lot of, I guess, low resistant liquidity on the 4 hour that's built up, and you have this liquidity sweep, but you also have, say, buy side here. And oh, I thought I clicked the line, and you can see that here we were respecting bullish gaps. Here we are more undecisive. We're sideways, we're range bound. We're not always bullish or bearish. We also have the ability to be sideways and choppy and not have any real bias. Then you go to the 1 hour, one to find more liquidity, two to try to reinforce this. So my bad. You see on the 1 hour, we have the same bits of sell side. We have these big candles that are just forming displacement ups and downs, and we're very range bound, but we are delivering from here. We have been making lower lows. We did take out this high. We have FOMC today. It's price action doesn't count. But overall, we're bearish. Nothing's adding to me being wanting to be bullish. So then you go on the 15 minute, and what would you do is you would mark out session high. So we have London high buy side liquidity on the 15 minute. You also find any important fair value gaps, which we don't have any because we've been choppy, but I'll show you an example later. So, and I would also mark out just major points of sell side liquidity. So here we have New York AM low. I never really mark it like this. I'm just gonna mark it sell side liquidity because we have FOMC coming up. I think price is just gonna rocket down. It's gonna take one side, go down to the other side, especially because we don't have any low resistance liquidity anywhere. We could really just go either way, and we might go up to this fair value gap. We might go down to this one. I don't even have a real bias, so I'm just gonna wait for price to sweep one end, and then if it looks like it's gonna sweep the other end, maybe I'll enter. Um, and then I enter on the 5 minute. So on the 5 minute, I would mark out more liquidity. This is significant. See, now you're seeing some more low resistance liquidity or trendline liquidity form here, meaning that I think price might, if it goes up to here, it'll run up. And yeah, so price action is pretty bad here. But I'll show you a good example. When let's look at good example was here. So now we'll do this example. I know I've used it a couple times, but it's really a good one for showing my strategy. On the high time frame, there was I erased the no, it's this line. This was the drawn liquidity on the buy side, so we are bullish. There was a previous day high over here. So this was the previous day high. So we need a drawn liquidity on the high time frame and the low time frame. We need liquidity sweep on the low time frame, and it also match the high time frame order flow and direction. And where all the high time frame liquidity points are draws. We're not looking for reversals and stuff off them. We're looking for draws. And so we're only looking to drop to the previous day high. We could reverse, we could react to them, but it's usually the whole 4 hour candle or something that would react. So then we would mark out session highs and lows. We have what was supposed to be an Asia low here till I messed it up. The hell? Asia low here. Sell side liquidity. We have what was like low resistance liquidity got swept here, and then we delivered down. We had low resistance liquidity up here. We had we have an internal high, internal buy side liquidity, and we would look for delivery off a low time frame PD array also, but we just don't have for this day. And what are we looking for? We're looking for a manipulation leg. So here we have a manipulation leg clearly. How? Because one, we hit liquidity, and two, we have a displacement, meaning that all these sell orders were activated and we actually displaced downwards and manipulated down. Then we had a liquidity sweep, and how do we know? Because we displaced back upwards, meaning that institutions have entered. And I look for an inverse fair value gap, right? So on the 5 minute, because I find it more consistent, 5 minute inverse fair value gap. And you're also additionally looking at to mark if there's a balanced price range. And sometimes you won't be able to because the candle just formed, then you can't wait for the next candle. But let's say this candle forms. The second you have an inversion, what do? I mark out a fib with optimal trade entry marked out from the low after, like the leg that created the manipulating leg, the manipulation leg, to the swing high. The first swing high you get, all these are just highs. This red line's equilibrium. I will only enter a trade under equilibrium because my first target will be either this swing high or maybe one above that, but it will never be under this. And I don't want to target my first target being under 1R, and preferably it will be way more than just 1R. And then I look to combine the equilibrium and the inverse fair value gap. Now, why did I say mark out the BPR? Because over here, if price entered, I would put a limit probably without, like this BPR formed, but I would just put a limit around, depending on how much my risk and reward I want to be, and if there's like other factors, but it can simply be just under the equilibrium at the fair value gap. My stop loss will always be a tick under the low. My take profit would be at the high, and I would have another take profit in here. But what would I do? I can do this instead of this risk reward, but I would personally lower to this consequent encroachment. And because it's a BPR formed, I might enter in the BPR here. What is a BPR? You have a bearish fair value gap and a bullish fair value gap through it, and you see how there's no wicks or anything? That's a BPR. And this is within the optimal trade entry, which is from 0.62 to 0.78 retracement, I believe, or 0.72, 0.62 fib. I forgot. I'll just check my fib. Or here, we'll click here. It is between these numbers right here, 0.62, 0.78. And yeah, so I would enter, and then I would put my first take profit at this internal high, and then also only move my stop to BE because I'm trading their retracement to get good high RR, and then I target whatever drawn liquidity I have. And yeah, besides that, I risk 1%. If I'm losing, I risk 0.5%. Trade only when I have good psychology, trade only when I have good environment. I trade only in kill zones. So here we have the London kill zone, which is between 2 and 5. We have the New York AM kill zone that goes until London close. So I only trade between 7 and 12 and 2 and 5. I can hold trades through these times. I just don't enter them and don't look for the actual sweep or anything. And I like to hold at least nearly all my trade in these kill zones. Don't trade Asia, don't trade before, don't trade overnight, and I don't trade PM because I don't find good moves for a 5 minute. And I honestly just, it's late for me. I don't trade that time. So yeah, that's my strategy. It's been great. It's been making me really good trades. This one was on the lower end actually. I've been hitting a lot of 3R trades. Really understanding. I made a video on the retracements. I use the same example. I made a video on liquidity, I made a few videos that explain about liquidity, which is how you understand to take these trades, why this was a good sweep, why to target here, and how to analyze on the high time frame. That's my strategy. If you have any questions, leave in the comments. Thank you for watching, and I really hope this will help you. And yeah, I wish you luck if you use it. And it requires a lot of patience, so don't force trades. Really look for the very obvious trades. And yeah, that's it. Thank you for watching, and good luck trading. Be safe.